Hey, good evening. It's the 21st of November, and it's a great, great close to a wild week. Look at me. I dressed here like a Santa. I think the market gave us something tonight, something to talk about, something to smile about. But let's have a look and see what we have in the markets. I hope everyone has had a good day. It's been a bit of a difficult one, to be honest, a week as well. Why? Because, we all experience the sell-off, I guess, and it depends on how you are hedged, how you're positioned. But there are quite a few lessons there in the week for me, especially, and I believe there are lessons there for you as well. It started off as, yeah, it's a joke. Things gonna return, but you know what? It didn't, and we could all see what happened. I think a lot of people had a lot of reasons for the sell-off, but personally, I don't care. I think I'm positioned well, upside, downside. While I am an investor, also a trader, but I look at both ways because I keep talking about the market. The market moves in three directions. It goes up, it goes down, and it goes sideways. And of course, if you are investing or trading and you are picking things at the wrong spot, I wouldn't really talk about necessarily say the top of the right or bottom of the left. It depends on your strategy. If you are picking stuff at the wrong spot, then unfortunately you will be caught, and the market will punish you. And this is one of the this is one of the jobs, the careers whereby you get your instant results, you get a reward instantly. Whether you do well, the market will punish you, or likewise. And if you do, so it does not really matter how you place this trade. The market has a way of just giving everyone the market has a way of giving everyone the just desserts. And that's all that matters. Okay, so on that note, let's get ready. And as I was saying, so yeah, hope everyone had a good day. So we started off with the cues. We started off with the cues today at let's just talk about this today. Yeah, the queues actually breathed a bit. We had a good sigh of relief. Is it going to be a pregnant pause? I did make a note and I said I think the market is way oversold. But is it Max's theory that said the markets can remain more irrational much longer than you can remain solvent? So, you know, um, I just trade based on what I can see. It depends on what you can see, really. So you trade what you can see, not what you expect to see. So this is what I could see. I thought the market was way oversold. And of course, a lot of people will be glad it's over. But, it's another week. But, the market is still there, coming for you, coming for your money. And you are there. It's always going to be open. One advantage about the market is that there's always opportunities. Okay, opportunities right there. So this is it right there. It was a great close. As you can see, picked the bottom and then rallied up right there. So you might say it's 0.75, but that was a huge relief to the markets. And if you look at the entire week was just a huge wild sell-off. And but speaking of which, everyone is talking about capitulation or capitulations. It's not really that. Why? Because if you can't just call it that, because look at that. We've only had, like I showed yesterday, we only had about 5% downwards from the market. So it's not really, it hasn't really been bad. Yes, and overall the markets are still, the market's still up a lot more than 15%, I think, on aggregate this year alone. So it's amazing. It depends on what time you enter the market, really. And you know, again, it's been great for me, the team we work with, and I hope it's been great for you too. But anyway, so that's the cues today. I'm just going through a few things that happened. If you think about it, for example, Liberation Day, we had a huge down in the markets, and so right now, Liberation Day was, let me just bring it to everyone's reminder, which was in April. And you can see that right there. We had a huge drawdown. And you can see it took us all the way to 400. So we've moved about, I mean, we're still within 200 points. Okay. And I'm just thinking we're still very much within volatility range for the month, because if you look at the month, we are, I'll try not to keep this long because I have quite a few things I wanted to talk about. Yeah, for the entire month, we're still within volatility range, and for the month, and of course, this today's price action kind of pushed it back a little bit. Say, hey guys, let's get a rest. We've been selling off, and at some point, if you're climbing, you get to the 17th, 18th, 19th floor, you're gonna rest. Or if you're going down, you're gonna rest as well because you're using energy. So we're still within the volatility range for the month. So it's not capitulation at all at the moment. It's just what the market forecasted November will be. I think a lot of people started saying, look, November is cancelled. Relax, relax, let's breathe. It's another day, another month, and we'll be here. Okay, now, another thing I wanted to talk about was Bitcoin. How did that go? That is just, again, I woke up, it's quite funny actually. I woke up to I woke up to Tom Lee's message about the, having about about Bitcoin having a fault, and which is why it was selling off. Some people say it was a mistake. For me personally, I did say, Tom Lee's treasury, which is BLSH, so BMNR. Apologize, yeah, bits there. I think he said it was that he said Ethereum was going to a certain amount. I think it was like 50,000 or so. Bitcoin going to 200K. Don't quote me. I think that's what he said. That's what I saw. And he said there was a fault in the equation, or sorry, in the technicals algo, which is why Bitcoin was selling off. Look, that's a mega sell-off from crypto today. But with Bitcoin over the entire month. And that just took about 30-25% off. Okay, so you've got to be careful, you've got to be play gentle, and I think a lot of things. I mean, I did a deep dive and I thought, okay, let's talk about it. Why entirely is the market selling off? Okay, number one, and I put this notes here, and I'm just trying to put it on the board so that we can all read it together. Oh, well, so you can read it with me, really. So bear with me. Let me get it. Hopefully, it will copy this time. If it does not, I will have a way of sharing it somehow. Okay, it's quite a lot. So let's see. There you go. So let's look at it from the top, which is the notes I was trying to share. Okay, so it says BTC reached. Don't worry, be happy. Bitcoin reached an all-time high of 126,000. You know what? Don't worry, I'm just going to talk about it quickly. Bitcoin reached an all-time high of 126,000 on the 6th of October. That's what happened. But less than 2 months later, the price is corrected by about 35%, which is what you can see right there on the charts. So this is correct. This is a 35% correction. Okay. So whatever price you buy in that point, you have not made any money. And that's similar drop to what we to earlier in 2025 when the price made a new all-time high of 109,000 in January and pulled back 31% to 75K, which happened in May. And that's right there. You can see right there, the drawdown. So let's not so that was followed by a 68% rally to a new all-time high of 126,000. But let's not forget how quickly sentiment changes in both direction, up and down, big time. BTC price declines accelerated the last 2 days, and crypto sentiment index is at the lowest level in over 2 years. The what's it called? Fear and Greed Index from, I think it's from, what's it called? CNN, I think. So what drove the decline? Pundits blame it on million things: liquidity, auto leveraging, Trump tweets, tariffs, government shutdown, etc. But it all boils down to the Fed interest rates. That's what I think. After the 25 basis points cut in late October. Markets were expecting another rate cut in December and more in 2026. Then the outlook gradually changed. The Fed Chairman Powell started talking down the need for another rate cut near term. On 21st of October, probabilities of another rate cut for December Fed meeting were 98%. I remember that. But a month later, the odds gradually declined to 39%. I mean, personally, I thought we shouldn't really get a rate cut until yesterday when they suddenly shifted back to 70%. So what will drive the rebound or the rebound now? Logically, the opposite of what drove the decline, which is interest rates outlook. What if unemployment for October and November come in light, or the PMI manufacturing activity continues to deteriorate? And as AI increases productivity, lowers rate costs, creates deflationary pressures, and replaces entry-level jobs for recent college graduates. Also, housing in US is weak, which will get reflected in CPI, which is the inflation data. Fed will need to cut rates as early as 2026. It's that simple. Meanwhile, the adoption of crypto by traditional finance and mainstream public payments, stablecoins, remittance are growing. Infrastructure is being built and integrated deep into the fabric of modern finance. So, guys, have some faith as an investor. It depends on where you lean, really. I'm still a speculator, unfortunately. Yes, I've read a white paper, but I still am not much of a believer for now. And you can see how Bitcoin has performed this year. I mean, you got to be two things. You're there for the money, you're there for the tech. It's up to you, really. And this year, it's down. Oh, yeah. Okay. Now, speaking of AI and all, another one was Microsoft. Microsoft announced they announced job cuts this year. Sorry, I think it was today. I think it was what 1,800 job cuts, which I mean I can post a link. It's a CNBC news. It wasn't me. Okay, let's see. So 1,800 engineers in record layoffs, despite saying it needs to innovate faster. You know, you could read into this later. About 40% of the roughly 4,700 positions eliminated across Washington, New York, New Jersey, and California were engineering jobs. Video games, advertising, and AI search engine were also significantly impacted. You know, I'll keep that on the top level. Another one, we had PwC. What did it say? That was from BBC, actually. And I read that. And I mean, I have an engineering background. And, you know, I shook my head because they said jobs are under threat from AI, according to the PwC boss. Yes, they keep talking about they need the right people. So what am I trying to say? Are we saying AI is innovating? Well, it's changing things as fast as possible, or people not innovating enough? So a lot of things are under threat, which is why I do what I do. You've got to learn something aside that. And this is what is affecting the job report, and that's part of what is affecting the drawdown in the market. So that's something I just thought I should talk about, really. So job losses, which means the government cannot create jobs as much as they could. Also, we had Eli Lilly. That was a great one. Eli became the first health company to go 1 trillion. So should I play a drum? Nah, it's fine. Okay, so let's look at LOI. Again, on a weekly, look at that. That's a beautiful chart right there. And this is on so Eli Lilly right there hits 1 trillion market cap. And you can see it right there. It's 1 trillion on the dot. There you go. 1 trillion on the dot right there. So how does this bode for another company? NVO in similar realm. We have another one. NVO is 214. You know, it depends on what you want, really. So it's still very much bearish NVO. We have, I think, Bayer as well. There's quite a few of them. Quite a few of the health tech in this space as well. This is German, Bayer, and they are, sorry. It's been a torture this month of November. People are saying can't wait for November to end. And if you look at Bayer as well, it's still no, I mean it's European, so it's still very, very, very it's quite small compared to to Lily and the American counterparts. Also, HIMS has actually had a terrible month, you know. I was actually bearish HIMS until about 33, 34. And you can see try, you know, this is actually a huge, huge, huge sell-off. And finally, what's what is the retail darling? Oscar Oscar Health as well. So that's another one. You know, all these health services. This is a retail darling, and you know, you could actually notice that everything for me is price action. And what do I mean by that? When everything else fails, people just, you know, you get this retail, it's a retail darling, you get lots of noise. You got to control yourself, really. When people are screaming, don't just, you've got to have conviction, number one. Number two, you've got to be able to follow where the money is. I mean, what is the price action saying? What is the fundamental saying? Does it align? If it doesn't align and you're just reading charts and you're just following what people are saying, unfortunately, it's not saying it in a bad way. You will lose your money, and you know it's quite hard. You're giving a part of you away to this market. You don't want to be losing it. Okay, another one I wanted to talk about is yeah, speaking of crypto, I think the market bounced a little bit, and this is one which was a call in the group earlier today. It was a good 36 call. We were just able to catch the bottom right there, and you know we saw a huge bounce to 38.60. So that's amazing. Um, another one I wanted to talk about. Okay, now so. One thing you need to understand is when the market is high, it's not my quote, by the way. When the market hits a high, I think it's Buffett's Charlie Munger partner who said when the market hits a high, things are not as good as people think. When the market hits a low, things are not as bad as people think. Again, when the market hits a high, everyone gets excited and carried away. Okay, things are not as great as people think they are because markets quite, you know, irrationality drives this market. Okay, things are not as great as people think they are. But when the market hits a bottom, it's probably not as bad, exuberance, etc. You got to have the, you know, understand the nuance within them. Now, so this takes me to, especially for, this is a message for the investors who was listening to me. And I found this brilliant tweet right there, was posted or was shared in the group. People say 10K Nvidia in 2015 will be, if you put $10,000 in Nvidia in 2015, you will be worth 2.15 million today. But what you skip, oh, if you'd done $10,000, it would be worth 2 million this time. But people forget, number one, you had to watch a 10K grow to 16, 37, 76. But the crash divided by 2. And then it picks up to 130, 293, and then again it halves. And then from there, quadruples, and then quadruples again, but you do not have to sell once. So picking the video was easy, but holding it was the hardest part. So if you are an investor, you got to have that conviction in the drawdown. You've got to understand, why do you sell? Have things changed? If they have not changed, stick with the conviction. Probably add to them, really. But again, nothing is financial advice. You've got to understand what you are doing. Have your wits with you. I'm just going to leave you with a funny image that we tend to share. You know, when the market is bad, it's not all doom and gloom. But let's just find this. We share this. It's a meme, by the way. We tend to share it. I find it exciting. I find it funny, and I hope you do as well, because you know this is this was a this is something that happens in Nigeria, and you know it's you. So right here, someone stole, and you get the public. They jump on you. Okay, let's just for the sake of the algorithm. So this person's been, of course, been beaten up, and why? Because people just abhor. They said the government cannot do their job properly, so they take law into their hands. He was caught stealing, and therefore the youths beat him, and this guy's been tortured. And then they gave him an energy drink to revive him, gets a bit of energy, gets some strength. And they thought we're going to pounce on him again. And that's literally what we had in the markets this week. The market goes up, 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 and then boom. Oh God. And it goes up again. People get a lot of hope. Oh, it's going up, and then boom, you get the sell-off. So that's literally the story of the market this week. Guys, I hope everyone enjoys a great weekend, stress-free. So I hope everyone enjoys a great weekend, stress-free, and at the same time, we hope the worst is beyond us now. I haven't really seen a capitulation. I think we should get one, and then we just draw off that wall of worry. Remember, though, kept talking about the market keeps climbing this wall of worry. We were expecting a drawdown at some point. It didn't come, but what do? We just keep trading, keep investing, follow the trend, follow the markets. Until then, guys, I shall see you next week. And hey, have a good weekend. Take care, guys. Sorry it's a bit of a long one tonight, but have a good weekend, and I shall see you soon. Bye-bye.